That's part of the trading system because that's part of your entry, and it may even be part of your exit, depending on how you implement those. Lines of support and resistance are probably, if you took away all of my other trading tools, other than my candles, don't take those away. Take away everything else and just leave me with support and resistance. They are the key for me. I'm looking for a breakthrough resistance on heavy relative volume with a long green candle. That summarizes my setup and my trigger. Now, if your listeners here are getting confused with all of those terms, you really need to read Trading Secrets, my book.
Welcome to the Get Invested podcast, where we share great conversations with experts from all walks of life to uncover their secret know-how and where they invest their time, their skills and their money, and the benefits that this has created. You see, the truth is that everyone invests. Every minute of every day, we're investing our time, our skills, our energy and our money in something. Some of us are investing consciously, some unconsciously, sometimes for good, sometimes for bad, and sometimes for no impact. Get Invested will help you to start living by design, not by default. I'm going to help you to make it happen, not let it happen. You'll hear the top tips on how you can live with conscious intent so that you can live more, work less, and leave a living legacy by investing now. Listen to the show to discover the top tips on how to get started, make the most of your investment journey, and ultimately to be living your dream, not someone else's. More episodes can be found on iTunes or at bushymartin.com.au/get invested. Thanks for listening, and now let's get invested. Hi, freedom fighters. Are you feeling paralysed by the current and ongoing radical uncertainty that plagues our future, and the constant, often conflicting media noise about gloom and doom on one hand versus the risks of booms, bubbles and pending busts on the other? Are you left just not knowing what to do, so you either do nothing or get sucked in by FOMO to buy assets just because everyone else seems to be? Treading water or hitting and hoping, all driven by emotional fear. Now, neither sound like rational, good, sound investment options. So how can you better read the tea leaves of future investment opportunities and make good, profitable decisions in the days ahead? How can you protect yourself from yourself as your biggest inhibitor to your investment success and prevent your emotions from driving what and when you invest? How can you successfully swim against the tide and avoid the knee-jerk, stampeding herd of frightened horses that react to every single noise? For me, it's always been about learning from history and emulating the successful approaches of other great investors. But who should you follow and emulate? Who is the greatest investor? Is it Warren Buffett? Ray Dalio? George Soros? Well, you may be surprised. But before I reveal who it is, let me tell you a story adapted from the Daniel Code. Back in 17th century Japan, a young man named Homer ran the family rice trading business at a time when rice was the lifeblood of Japan. More than a food, rice was both a culture and a currency, with rice-growing villages' whole lives revolving around rice planting, growing and harvesting cycles. And most parts of this cycle was celebrated with festivals and all sorts of formal ceremonies. Rice was not only a precious commodity, it was a culture central to Japanese life at that time. From rice came the famous Japanese rice wine sake, rice cakes, rice flour, rice vinegar, and much more. The rice plant produced not only its precious grains, but a large amount of lush green foliage, which when dry, became straw. And rice straw, too, was an essential part of Japanese life. From straw, traditional villages in the north made hats, clothes, utensils, and the exquisitely fine rice paper. They made important religious figures, masks, decorations, and 100 other everyday items. In this sense, rice was the Japanese economy. Feudal rulers, referred to as daimos, collected grain from the farmers as land tax and sold it from their storehouses. Rice trading was the Japanese way of life for farmers and the merchant class. Rice soon became the main currency of value and worth in feudal Japan. So we start the story on the most important day of Homer's life, the day he launched himself on a great adventure that would see him reach dizzying heights of fame and fortune. And this was the day that would eventually see a humble rice trader of the merchant class achieve the greatest honour his country could bestow. One Monday morning, Homer sat cross-legged in his precious straw mats at his family rice warehouse and forced himself to concentrate on the lists of deliveries and inventory that required his attention every morning. And as he did so, he kept looking longingly at a pile of large, fine rice paper parchment that sat beside his small desk. These parchments were unusually large and were provided by Homer's good friend Nomura-san for a very special purpose. These papers were Homer's most precious possession. More precious than the family's land, more precious than the inventory of rice bales stored in the 6 separate warehouses. It was covered with strange symbols, all of them painstakingly drawn by Homer. These symbols ran up and down the sheets in strange whirls and patterns. Numbers ran across the bottom and along the sides of the parchment. Some of the indecipherable symbols were coloured in red, others not. And the work to produce these magical symbols had been long and arduous. For over 15 years, Homer had researched ancient records, thinking about what he saw and what he learned, and always striving to perfect his understanding of the strange language contained in the symbols. It was an arduous task. At times, Homer despaired of making the intellectual breakthrough that he knew was required. On those days, he would retire to his tiny garden, where there was a single strategically placed large moss-covered stone amongst a small stream and 2 ancient cherry trees. Homer would gaze at the stone in silent contemplation. Eventually, balance, or wa, returned to his mind. Something deep inside him forced him to return to his research every day. Instinctively, he knew that if he could read just a small part of this mysterious and secret language, the rest would unravel. But the search seemed never-ending. Homer gave names to each of the symbols and looked for their sequence to repeat. With so many symbols, this was indeed a painstaking task. As the years passed, Homer gradually gained some of the insight that he sought. It came not as a bolt from the blue, but as a gradual dawning of comprehension. This indeed was insight. This indeed was rare knowledge. At last, Homer put aside the workaday chores of his family business and pulled the large rice paper parchments to his side. He gazed with fascination and reverent awe at the sheets. Then, inking his fine hair writing tool, he consulted his notes and carefully inscribed a small square to precise points, then drew a small line from the top of the square upwards. In due course, he drew another line of a different but exact length downwards from the square. With unhurried but long practiced precision, he finally inked in the box with red ink and sat back. He repeated this procedure on several more of the fine parchments, being careful to place each sheet apart for the ink to dry. Homer called for a pot of sencha tea and contemplated his drawing for an hour. He'd reached the stage where he could read a number of the secret symbols. In time, he'd mastered them all. Of those he did understand, he noticed they had consequences. One symbol indicated a certain probability. Another symbol had a different meaning. From his limited understanding, he'd isolated a small group of these magical beasts and watched what happened when a specific sequence occurred. He tested these sequences in his research hundreds of times, and he'd seen their patterns repeat again and again. His long-suffering research covered over 1,500 years of records. No one had ever observed a recurring event over such a long time span. Now, at last, he was ready. The next day he rose and left for the rice market, where he would undertake his true calling and unknowingly launch himself into the pages of history. His preparations were made and his mind was serene in the knowledge that he possessed insight unknown to others. Homer was about to take the greatest gamble of his life. It would not be a gamble based on certainties, but a gamble based on probabilities. From his endless research, Homer was able to calculate probabilities better than anyone else alive. Homer arrived at the rice market just as a group of growers trundled their carts laden with the new season rice bales into the town square. Here, merchants would inspect and haggle with the growers and their representatives to set today's prices on the bales arriving from local growers and from inland. The growers and their agents were in a gregarious mood. The early harvest was good, and the new rice was bright and shiny. But business was lethargic. Tea was drunk and pleasantries were exchanged. There was no urgency for the merchants to buy. The big rice merchants of Osaka adopted their usual pose of indifference by just sitting quietly and showing no interest. This tactic always wore down the growers. The biggest rice buyers operated on an informal cartel which controlled local prices. They could afford to wait. Growers had more rice on their farms and the main harvest was still to come, from the large rice-growing regions to the north and inland. Yes, they said to the local growers, it is a very nice rice crop. The gods have smiled and you are indeed fortunate. So sorry, our warehouses are full and nobody's buying rice. We're not really buying new bales today. Now quietly Homer went about his business, greeting the growers, inquiring about their health and their families, and buying their offerings. As the day wore on, other merchants noticed Homer, still quietly greeting the new arrivals of the market and still buying. What was he doing? Why was he buying? Didn't he know that this was just the start of the harvest and prices were sure to fall as more rice came to market? Silly boy, too impatient. What an embarrassment to his family. This wasn't the way of the Osaka rice merchants. The next day saw the process repeated. Homer buying, the others pointedly ignoring the new growers as their carts brought in the new bales. There were noticeably fewer bales arriving. The merchant cartel, now openly scornful of Homer, watched him again operating in his quiet way and still buying. Homer wasn't perturbed. He knew things that others didn't, because Homer had that most important of all market jewels. Homer had an edge. He had what is now known as a huge competitive advantage. At midday, an exhausted horse and its dishevelled rider clattered into the town square. The rider rushed to the leader of the Osaka merchants, crouched beside him, and whispered fervently. The merchant's news service was catching up with reality. The rider from the north was the last leg of a relay to bring some awful news to the cartel of merchants. Late and unseasonal rains in the major growing areas were ruining the annual rice harvest. There would be no abundant crop this year, and rice prices were going to rise sharply as the commodity grew scarce. Now the Osaka merchants moved with a real sense of urgency as they rushed to the growers. With no abundant supplies to come as the season wore on, they must buy what they could from the local supply. So sorry, said the largest grower. All of my rice bales have been sold to Homer. What will you bring to Osaka tomorrow? Asked the merchant. So sorry, replied the grower. All of this year's harvest from my farms has been sold to Homer. And the same story was repeated by every grower. There was hardly a grain of rice to be bought in the whole of Osaka. Homer had totally cornered the Osaka rice market. The merchants cursed their intelligence sources and poured scorn on their news providers. Their horses were too slow, the riders were lazy, they deserved a good kicking. The only explanation must be that Homer had better intelligence. He must have a courier pigeon service to know these things. Now the merchants would be forced to buy their new rice from Homer, and he was sure to ask a very heavy price. As the sun rose the next day, Homer sat in his warehouse with his beloved sheets of rice paper, covered with all of those strange symbols. Local men had worked through the night to store the huge supply of new rice bales in his warehouses. Additional warehouses were being leased to accommodate the rice bales, still to arrive from the local farms. In an hour, the rice merchants of Osaka will be at his door, desperate now to buy some of the new season rice that they had so mistakenly refused in the days prior. Homer's edge was not in faster horses or pigeons. In fact, Homer studiously avoided news and industry gossip. Homer's edge was in the rice paper parchment. All of those strange patterns that Homer laboriously drew on his parchment every morning, day after day and year after year, were not just pretty patterns. They were symbols that recorded the previous days and weeks of rice prices, and they were drawn in a very specific way. The parchment patterns that Homer recorded could tell with a high degree of probability the likely future direction of rice prices. This knowledge and the edge that is bestowed on our hero was literally priceless. Homer had broken the rice merchants' cartel and would forever reign as the leader of the Osaka rice markets. In a few days, Homer had become the prince of rice traders. His charts reflected everything that was known about price, the open, high, low, and close of a day's trade. After a while of studying the charts, Homer began to notice that certain patterns formed right before the price of rice was about to change direction. Homer eventually realised the reason these patterns formed was because they were showing a change in the psychology of traders in the market. None of the other rice traders at the time knew this, because they didn't track rice prices using charts. So using his patterns, Homer knew when a reversal was about to take place, whereas the other rice traders didn't, which of course gave him a big advantage over all the other rice traders. The thing which made Homer so successful was the fact that he was the first trader to realise that the reason price movements occurred in the rice market was not because of rational and logical decision-making like most traders believed, but because of traders making decisions based on emotions like fear and greed. The relationship of the close to the opening price would determine whether the chart pattern was hollow, where the price moved up from the open to the close, or filled, usually black or red. Homer gave each of the patterns that he learnt to discern its own name, such as long days, short days, spinning tops, stars, raindrops, dark cloud cover, evening stars, dojis, three black crows, dragonfly doji, and others. Each had a specific meaning to Homer. He also appears to have used weather and market volume as well as price in these recorded patterns to adopt his trading positions. Now, until the early 1700s, only physical rice was traded, but then a futures market emerged where coupons promising delivery of rice at a future time began to be issued. From this, a secondary market of coupon trading emerged in which Homer then further flourished. Stories claim that he also established a personal network of men about every 6 kilometres on the rooftops between Sakata and Osaka, a distance of over 600 kilometres, to communicate market prices. After dominating the rice market of Osaka, Homer, the world's first recognised chartist, went on to conquer the minutia trade in the market of Edo, where he was reported to have made 100 consecutive winning trades. Homer's fame spread throughout Japan. He was considered the god of markets. In due course, he became a prominent financial advisor to the government of the day and was raised to the rank of samurai, the greatest honour that could be bestowed on a Japanese citizen. His trading ability also enabled his family office to become the largest landowners in Japan. Homer's net worth was reportedly over $100 billion US in today's money. And some years he took home more than the equivalent of $10 billion US. Now, his main writing, The Fountain of Gold, the Three-Monkey Record of Money, was the first book on market psychology. The book spoke about how a trader should act. The three monkeys reference meant the following: hear no evil says to not listen to what other traders do. Speak no evil says to tell no one about your position. And see no evil says to not listen or watch economic reports. In this groundbreaking tome, he claims that the psychological aspect of the market is critical to trading success and that traders' emotions have a significant influence on rice prices. His book is often described as the best how to invest book ever written. Homer had discovered that psychology and the irrational actions of participants, not economic logic, drove markets. He was unknowingly the father of what is now known as behavioural finance, over 250 years before it even became a thing. And his other books, Sakata Shensho and Sobasani no Den, and excuse my Japanese interpretation, I'm bound to be wrong, these two books further increased his fame, and the meanings that he ascribed to his patterns became known as the Sakata Rules. This is the life and legacy of one of the most famous traders that you've probably never heard of, because his Sakata Rules are the basis of modern market charts, and his beautiful patterns would have become known as candlesticks. And candlestick charting has now become foundational to most investing trading systems, and when it was rediscovered and then brought to the Western world in the late 1980s. So you may be surprised to hear that Homer Onisaha is the world's most successful trader and investor ever. He invented and relied on his Japanese candlestick charts to read and interpret market movements. Using them, he was able to develop a trading system that was able to read and predict market emotion based on probability, while eliminating his own emotion from affecting his investments by automating trading rules that informed him on when to get in and when to get out based on backtesting the historic performance of his recognised patterns. Now, this is particularly relevant to me personally, because when I first got serious about investing in equities markets way back in the late 1990s and was looking for a more structured and rigorous approach to investing to improve my results after copying a series of hit and hope losses, I stumbled across the wonderful world of candlestick charts. Almost overnight, I started seeing the world of investing differently. Like learning a new language that allowed me to see clarity in the clouds, I was able to develop a systematic approach to my investing that was aligned with what I refer to in my book, The Freedom Formula, as my investment gear set. And what's your investment gear set? Well, reinforcing the long-term uphill nature of investing, if your high-performance investment cycle is the vehicle that will get you to your net wealth destination in the quickest, safest and easiest fashion, then you need to assemble your investment gear set. In bike terms, your gear set is a set of gears for transmitting motion for a specific purpose. So you need to choose the best available gear assembly that will easily transmit the power of your upward progress. Trying to ride up a steep hill is pointless if you're stuck in top gear and simply don't have the power and energy to keep the wheels turning. So against this gear set measuring stick, as a time-poor, career-focused professional, anything you invest in must be G for growth-focused, offering high asset growth over the shortest possible time frame, E for easy to implement, A for affordable, being low cost to establish and affordable ongoing, R for risk-averse, because what you invest in must sit comfortably within your sleep at night factor, S is for simple and quick to understand, E for equity low, so you use as little of your money and deposit as possible to secure the asset, and finally, T is for time efficient and effective. So it doesn't require much of your time to acquire, manage or monitor and doesn't create a second part-time job. For example, it should only require about an hour a month plus 2 to 3 hours a year to monitor your investments. Now on this basis, anything you decide to invest in and the way you invest in it needs to satisfy these gear set criteria. That is, simple and easy, time effective, low cost and high growth. Meaning you just need to pick investment vehicles that tick these boxes and the job's done. And the amount of time you've got available to manage and monitor your investments or trades is the one that most investors don't consider enough. And, in my opinion, is the reason that many get themselves into trouble. So the investing and trading system that you develop needs to respect all of this, and candlesticks form the basis of this approach. They help you to read the emotions of others in the market while also removing your emotional attachment to what you're investing in, which often self-sabotages your investment results. And today more than ever, investment markets are driven by emotional sentiment and perception due to the ease of access and speed of action offered by instantaneous online trading platforms. So you need to be able to read the sentiment and slipstream you're investing in behind it. Candlesticks are one of the best ways for you to do this, providing simple visual tools that allow you to read and predict future movements just as Homer did in Japan centuries ago. And if you add candlesticks to other leading indicators and then backtest your system historically to confirm its probability, then you can create a successful investment system that suits you and where you're at. It's why I was able to develop a profitable trading system that actually had 60% losing trades. Yes, you heard right. 6 out of 10 of my investment trades were losers. But here's the kicker. Because of my tested candlestick trading system, the losses were relatively small versus the 40% of winning trades that delivered sizable profits. Now, very few investors are able to hold their nerve or are able to financially stay in the game when the majority of their trades are losers. And this is where today's very special guest, Louise Bedford, comes in. Louise's awesome book, The Secret of Candlestick Charting, was absolutely revelational to me when I first got serious about my investing back in the late 1990s. As Louise says in the introduction to this great book, I can guarantee you one thing. Candlesticks turned the key for me. After falling in love with candles, I became a profitable trader. They helped me stick with trading even when I felt like quitting. They enabled me to understand the soul of the market and trade with a trend. And because they did that for me, I'll bet you they can do it for you too. Trading is a skill set you can learn. I'm living proof. This isn't out of your reach. It's just a matter of learning the right skills so you can live life on your own terms as a trader. Have you ever seen one of those magic eye computer-generated three-dimensional pictures? At first glance, it seems to be one-dimensional and quite flat in appearance. However, when you squint and stare at the picture for long enough, an incredible three-dimensional object reveals itself in vivid detail. Oh, I can see it. It's a spaceship with little aliens inside. It's amazing, you exclaim. While the poor person beside you says dejectedly, Where? I can't see a thing. Once you know the trick of seeing the images, all of a sudden you can see them easily and everywhere, much to the frustration of your less enlightened friends. The method of accessing the hidden image is almost impossible to explain until you can do it yourself. And candlestick charting is very similar. Once you can see the information in the chart, you'll probably never want to look at another type of chart again. You'll excitedly talk about dark cloud cover and raindrops until your friends begin to think that you've taken a second job at the Weather Bureau. In Louise's book, you will discover a technique that has the potential to completely alter the way you invest using technical analysis, which is the examination of price and volume action on a chart. This is about using technical candlestick indicators to reach conclusions about the likely direction of share price activity, rather than relying on fundamental data like company balance sheet items such as profit and loss, etc. So if you'd like a powerful technique that can pinpoint trend changes prior to many other indicators, show you when a trend is likely to continue, and adapt to your existing investing and trading techniques that you never believed would be possible, then candlestick charting is for you. I've personally found candles to be an invaluable analytical tool. Most advanced traders have developed a high level of sophistication using candlestick analysis. Novice traders will also be greatly assisted by learning about candlestick pattern recognition techniques. Wherever your skills lie on the trading scale from beginner right through to advanced, the candlestick offers the promise of enhancing your profit potential. And today's guest, Louise Bedford, is the reigning queen of candlesticks and is a best-selling author of 5 books on the share market. She's a behavioural finance expert and has degrees in psychology and business. And Louise has been running her 6-month repeat-for-free mentor program via tradinggame.com.au since the year 2000. And she's also the founder of talkingtrading.com.au, a free weekly trading podcast that I've been lucky enough to be a guest on. So make sure you check that out. Now, Louise is also known as the corporate executive who lost the use of her arms and achieved financial freedom by trading with a pen in her mouth, as you'll hear during our great chat today. Now, Louise will inspire you to achieve your investing and trading best. When she's not hanging out mentoring her traders, she's spending time with her 2 children and husband, lifting weights at the gym and enjoying yoga, and trying to get a glimpse of her own reflection on the back of her business partner's Chris Tate's bald head. Now, if you haven't had a chance to listen to Chris Tate's entertaining equities investments insights, make sure you have a listen to past Get Invested episodes, numbers 115 and 124. They'll definitely get you laughing and give you great information. And in our great conversation with Louise today, she's going to enlighten you on the role that psychology and mindset play in trading and investing success, the importance of candlestick charts to trading and investing, the criticality of personal trading plans and systems to your investment success. She covers the biggest mistakes that equities investors and traders make. She runs through the keys for successfully investing in and trading equities. Louise touches on how an investor should decide what to buy and when to sell. And she gives you direction on how you can build the best portfolio to suit your needs, along with much, much more. Unlike most other trainers who teach theory and what should be, Louise and Chris are amongst the few who truly understand what does and what doesn't work in the share market. So if you've been seriously thinking about investing in the equities markets, or you're after a gigantic financial breakthrough in your share trading results, jump on tradinggame.com.au to get copies of Louise and Chris's books, and while you're there, register for priority notification of their next very successful restricted numbers repeat for free mentor program. And to kick things off to vastly improve your investment results, Louise is generously giving you free access to their proven leading-edge investment trading plan template. And to get you motivated, I'm going to reward you with a challenge. Just download the plan template from tradinggame.com.au by registering for their free trading pack. Then just fill it in and email it back to me at bushy@knowhowproperty.com.au, and I'll gift you a free copy of my award-winning book, Get Invested. As Louise has always said, your goal is to trade like a machine, safely and comfortably, never doubting yourself, with no ego. To achieve this goal, make sure you surround yourself with people who believe in you. It's one of the key differences between traders who excel and those who never achieve the results they yearn for. Now, I need to stress that I receive no financial benefit for suggesting the Trading Game or any other company, and I mention them purely on the strength of my personal experience and the proven quality of their services. I also want to reinforce that nothing we talk about today is intended as financial advice, because you need to get independent professional advice to make sure it reflects your needs and your risk appetite. So if you want to start your journey to becoming the next candlestick trading Homer, then enjoy this lively and engaging chat with Louise Bedford. Hi, Freedom Fighters. Now, since the initial COVID shock drawdowns early last year, virtually all investment classes across equities, property, precious metals, and even crypto have experienced massive rebound rises, with the perfect storm creating a bit of a FOMO feeding frenzy and lots of talk of bubbles, booms, doom, and busts. And the air's only starting to come out of the balloons, with a bit of a general sideways movement over the last month or two. So how can we make sense of the madness and better read the investment tea leaves from this point on? Well, for me, it's seeking the advice of a proven and very successful trader investor who's actually the leading light in investment education and mentoring in Australia, and just happens to be the very person who inspired and informed my own investment journey many years ago. So I'm very humbled and honoured to welcome the Queen of Candlesticks, Louise Bedford, to the Get Invested podcast. So let's get invested, Louise.
So exciting to be here, Bushy. It's been a very long time running.
It has, and
Yes.
and I've been following you for a very long time, and I've got to say straight up, that I've got to admit, and this is the first time I've ever done this publicly, but I had quite a hero crush on you from many, many years ago. Yours was the first Australian book that I read alongside your partner, Chris Tate. But the first book I picked up that I could find in Australia was The Secret of Writing Options.
Oh, yes.
Which scared the hell out of me, actually. And I thought, gee, I've got to invest a bit more in knowledge before I have a crack at this. And then I jumped onto The Secret of Candlestick Charting, which was revelational, actually.
That's good, because that was actually in order of the ones that I wrote. So good for you.
Yeah, I really, really enjoyed them. And it's talking about the tea leaves, it's suddenly demystified the equities for me quite substantially, because once I understood the patterns and the movements with them, it was like, okay, I can now have a bit of confidence around where the market or where a particular stock might be heading. But I digress. I'm getting off track already. Most people in Australia are familiar with you. You've got a proven track record, Louise. But for those who haven't, I'd love for you to share with us who you are, what you do, and most importantly, why you do what you do.
Sure. Well, look, Bushy, as you've mentioned, I've been around a very, very long time in the Australian investment community. I started trading in 1990, so that's going back before we had online brokers even. It was all to do with getting a broker and looking at their navy blue suit with the tie with the touch of red, going down to the ASX at lunchtime because it was not far from my office, and looking at all of the boards going, oh my gosh, there's my share. Oh, where's the next one? There it is. And it was extremely old-fashioned. So now, I mean, I'm hearing that there are full-time traders who have children who are full-time traders because they've read my books. So, oh, goodness me, time ticks on. So I've been a full-time trader since the mid-90s, and certainly after writing the books that you've mentioned, people tend to have me as a household name in the investment community. But the ones that came after those two books are Trading Secrets and Charting Secrets. And they're the ones, if people don't have experience with trading, I suggest that they start with those two, because they really are the core. I started up tradinggame.com.au with my business partner, Chris Tate. Now, of course, you know Chris. We've all had lunch together and you've had him on the show. You've been on our trading podcast called talkingtrading.com.au, Bushy. So we're all quite familiar with each other's work. And even though I know you've got definite arms into property, we tend to focus just on trading any market around the world over every time frame and helping people write their own trading plan. So we've been in business, gosh, I think it's 25 years, but we've definitely been running the mentor program for 21 years. This is our 22nd year coming up, which is just wonderful. And Chris Tate and I mean, we're probably chalk and cheese. You know, I'm pretty much the chat type of person. And Chris is very, you know, got the scientific background and ex-bouncer. And it's just wonderful to see that Venn diagram of where we come together and the things that we can impart to our trading community to create full-time traders and people with choices in their life. We love it.
Yeah, you're a great combination. There's a real yin and yang operating there that produces some awesome synergies. And Chris has been on Get Invested a couple of times, and I'm hoping, Louise, that today will be the first of a number of conversations that you and I are going to share here on Get Invested. So looking forward to that. But the big piece that I'd like to delve into a little bit straight off is, why do you do what you do, Louise?
Yeah. Well, I'll start with why did I trade, and then I'll move on to why am I training others to trade, perhaps, Bushy.
Right.
So I started trading. One of the guys who worked for me, he was an arrogant little mongrel, right? He was relatively good at sales, okay, so he did mean that I had an easy job as a manager. But I said to him at one stage, what is it about you? You know, something's going on here. You don't really care about your results, and it's driving me crazy. And Glenn, his name's Glenn Poswell. I mean, I can't find him. I'd like to thank him. Glenn told me at the time, he said, it's because I don't need the money. And I said, oh, what? You don't need the money? And he said he's earning so much money outside of his job in the share market that why would he need to worry if he lost this job? Interesting. I also had my dad. We went from being very poverty stricken to in 1985, we moved into a fabulous new house with a view, new boat, new cars, coats, the Bose sound system. It was like mind blowing because of gold. Gold did something big that year. So he totally swept my mind away, because growing up where, food was scarce to all of a sudden having these indulgences, it turns a girl's head, frankly. So that's why I trade. And in terms of the specifics, I've been with my husband, Chris Bedford, as opposed to Chris Tate. Chris Tate's my business partner. Chris Bedford's my husband.
Hey, I'm gonna jump in there, because I've been stalking you a little bit in the preparation of the chat, and I hear you've got a bit of a Chris crush. There's not only Chris Tate and Chris Bedford, but there's a number of other Chris's that are pretty instrumental in your life, Louise.
There truly are. In fact, rarely have I had a boyfriend whose name is not Chris. My first broker was a Chris. My gardener is a Chris. My girlfriend, my beautiful Christine, Chris. So yeah, look, what can I say? Chris's and me, we do work well together. So it's funny how these little serendipities occur, don't they, Bushy? I'll make an exception for you, though.
I was going to say, I feel very privileged to get through the gate.
Well, now you know my little secret there, don't you? Gosh, all of these things I told you over that lunch when we caught up with you and Sonia, they really, really are, aren't they? Oh, I can just see how this interview's going to go.
But I interrupted there. So you're getting back to the why you're helping others. Yeah.
Yes. So that's why I started with trading. But then when things didn't go well for me from a health perspective, and I had to leave my corporate job, and my husband was beautifully supportive. By then we were both pretty much far down the line in terms of trading and how to make money. It took about 5 years for me to retire from my job, the JOB, just off broke. I didn't retire, though, because I was ready. Bushy, I retired because I had to. So I had a health issue. It meant that I couldn't move my arms for about 3 years. It was horrendous. I had a broker at that stage. His name was Chris.
Of course it was.
Yeah. He was a wonderful person. He said to me, look, if you can get me the order, then I'll put it all in for you. So I literally traded with a pen in my mouth for those 3 years. I'd put him onto speed dial, and I'm pretty quick with the pen. He would take the order through. He'd even do the calculation for me. If I said, what's this divided by this? Because it's hard to speak with a pen in your mouth, of course.
You'd be pretty good at it by now, though.
You would think. So I had my team. I had my supportive home base at home. I had a broker who'd put in the orders for me. I had a corporate job that I didn't want anymore, and they didn't want me. That's the hard part. We can give as much loyalty as we want to these people, but in the end, if there's something that goes wrong, unless the loyalty comes back to you, it's all one-sided. So I was in business, baby. And from then on, I started finding people at my local pool. So a lot of my physiotherapy for my arms was to move in water and to try and get my arms to move with a little bit of resistance. We formed a little group called the Mutants. It's probably not very favourable, is it, when you look at the name? But we called it ourselves that. There were amputees in there. There were people with hideous health issues, far more dire, far more serious than my own. And I taught them how to trade. So they could get off welfare. They didn't have to have a pension. They had an intellectual pursuit that meant so much to them. And it didn't matter what their bodies were doing. They could always make money. And that's how it started. It spread from there, Bushy.
Yeah, really, it must have been a pretty dark time for you, Louise, because having, again, doing the Google stalk, a really good position with Dun & Bradstreet and access to a lot of information on companies that would be pretty useful in your trading activity, to suddenly have that rug pulled out from under you and you sort of questioning, well, where to from here, and being really physically challenged on a day-to-day basis. Can you share with us what was going through your head at the time, and how you sort of managed to work your way through that to now be achieving the success that you have for so many years?
Yeah, see, a lot of people have got something that is on their back. It's a backpack full of bricks, and whether it's a physical thing like I had, or an emotional thing, or maybe it's something that they're carrying baggage from their past, it's extremely hard to release, isn't it? Look, to be open with you, I don't know if I'm 100% through it. I know you want me to say that I've come out the other side and everything's roses, but I don't know whether that is totally possible. All I knew, and I still know, is that we have today, and today is where it's at. So let's just try and go a little bit further, see a little bit further, and do a little bit more. So those tiny incremental differences, those miniature changes, and it's not a clear trajectory from bottom left corner to top right. We know that there'll be dips along the way, but that concept of trying to be just 1% better every day, that has suited me very, very well. It's a lesson that I've been able to take into other aspects, like training other people, creating our mentor program, even with friendships. To be able to have that just 1% better every day concept is really the thing that saved me from a mindset perspective.
Yeah, I could well imagine. Talk to us about your trading journey, if you don't mind, because if you're anything like me, the first few years were pretty disastrous for me because my skill didn't match the market really, and my self-awareness didn't match the market either, for that matter. So I was making a lot of emotionally based decisions that just, but all really important learnings. Can you tell us a bit about your trading journey and how that went and how that's led you to what you're now doing?
For my very first share, I was just so successful, Bushy. It was just no problem at all.
Sure, Louise. Pull the other one. Okay.
We know that that's not accurate. You know how it is that you think you're good in one area, you assume via the halo effect and some hand of God touching you on the forehead and saying you are the blessed one, that it will translate to another arena. And usually it does not. So for me, and you probably have gained this because you do know me now, Bushy, is that I'm quite an emotional person. Hey, when I'm flying high, I'm flying high. I try not to drop too low, but I do find that I'm not that metronome, that person that is more robotic. I've had to really work on that. That's been a definite, let's try and improve on that aspect. So for me, to begin with, I just thought the share market as being a treasure chest. I was so excited. I'd seen what Dad had done, and I just had so much of the advertising of the share industry rammed down my throat that I thought I'd go instantly and be a squillion billionaire within seconds. But no. The first day after I bought my 5 shares, I came home and I said to my husband, oh my gosh, we aren't going to have to work until we're 70. We can retire in just a few short years. This is going to be incredible. We can buy an island. We can buy cars. Maybe we should go around the world on a yacht and I can trade. I will support us, my love. I will do it all. Next day, the shares went down just a smidge, just a little bit. Oh my gosh. We are going to live in a cardboard box. We're never going to be able to retire. This is terrible. We're never going to be able to afford children. How are we going to afford private school on this, on our salaries? No. Okay, so up and down and up and down and up and down we went. And somewhere around year 3, I just about gave myself a complete heart failure with it, and I blamed my broker. I said to my broker, how dare you get me involved in this awful area? I hate it. I hate you. I hate what I'm doing. I'm going to quit. I had a full-on tantrum, and I said, the only thing that you can do to save this is to find another trader, has to be a woman, who's making money. And he damn well did. And from then on, actually, my life changed. Because I talked to her, she showed me a few tips and tricks. She scared me, she terrified me, but still it gave me enough incentive to see that little bit further.
Yeah. So how's your relationship with money and investment changed over the years, if it has in fact changed?
Yeah. I think it has. I think initially I was in that scarcity mindset. Originally, I wanted to have my husband working, me working, and then the share market working as if it was an extra person in our household, so that there'd be 3 incomes coming in for 2 people, you know.
Yep.
Now I just want to work part-time and earn squillos so that I can not only look after my family, but also look after people who I really care for. That includes philanthropic endeavors. So I didn't really have that broader view initially. I was very self-centered. I was very internally driven. But now, as time has ticked on and money has become less of something that I have to really focus on, it's more of an external drive to give back and to really thrive with that. I mean, that's what gives me my kicks. I mean, trading, it's not really something you can continue at that fever pitch, you know. You can't.
Let's face it, it's boring.
Yeah,
it's staring at a screen for hours a day. And I day traded for a couple of years when I had my own ground zero moment many years ago. And I'm a person who needs social stimulation. So, and what happens is when you sort of glue to the screen for so long, you start wanting to make the market happen, and then you start doing stupid things. So you know, that's really interesting, Louise. Tell me, and it may well be that way already, but it sounds to me a little bit like with the health issues that you were challenged with, your husband, Chris, was probably making an income, and you were turning that into an investment. Am I reading that? Because I'm a big believer in the power of 2.
I am too. Yeah.
Yeah. And Sonia and I did that. We actually did a baton pass exercise. So the periods where I would be building the wealth while she was working to pay the bills. And then there's a couple of times we switched over, and I would generate the income while she built the wealth. And that's been a very powerful combination. Has that ended up working very well for yourself and Chris?
Yes, it's definitely, it's not 1 + 1 = 2. 1 + 1 can equal 15.
Yeah.
Originally, Chris had the job as well, and I had the job. And unfortunately, when I was full-time trading to begin with, his business that he'd moved into wasn't going very well. So we lived in poverty. Very much so. It's really kind of embarrassing to admit now. But you know, when you're in your early 20s, how you still see everything as being a possibility. It didn't actually worry us that much, because we went, there is going to be a big future for us. And if we put in the work now, it will pay dividends later. So it's been really, I think from a couple's point of view, developmentally, it has just been a terrific thing. He's seen me in poverty. He's seen me in a very well-off situation, and regardless, we're still good friends. So I think that's a beautiful way. And
totally.
Certainly, you know, I know not everybody is lucky enough to have that situation, but if you do, it is gold, my friend, absolute gold. So we like the idea that now, this is the funny thing, now the share market generates the shorter term profits, and then we fight over who gets that money, because he does property development, Bushy.
Oh, I didn't realise that.
Okay, there we go.
Aha.
Yes.
Now we're talking.
We do a little bit of a scramble, and we do have like a quarterly meeting where we say, okay, I want that money. Oh, what about that entity? Oh, we should do it under this, you know. And so there's a little bit of argy-bargy, I think it's good. Get it out on the table. And then we fight over where the money should go. And it's a good-natured thing, of course. But sometimes he has ended up with more of the money. Like we've done a big development recently. We're not quite ready to sell, but nearly ready to sell. So once that money comes back into the pot, then we will divide it again. And it's been fun, actually.
Yeah, well, it's a really good discipline, actually, because it means that you're on a regular basis refocusing on, okay, well, where are we now, where we wanting to get to, and what's going to be the best use of this money to help us get there.
Exactly. And not everything wins, you see.
Yeah.
So once I invested in a friend of mine who I'd known for 11 years, and Chris Tate, my business partner, did too. And we put in $500,000 towards his friend who went over to the Ukraine and spent it on prostitutes.
Oh, ouch.
Correct. So not everything we do wins, but because that was a segment and it was quarantined and that money was set aside for that purpose, it's almost like I could emotionally quarantine that in my mind. I still grieve over the friendship loss, don't get me wrong, but the money, we've been able to move past that $500,000. Just what's that between friends? $500,000 loss.
Ooh, yeah, lots. Yeah.
Yes. So it's never going to be completely smooth sailing. And the plus is because Chris Bedford, my husband, and I were talking about that all the way through. We knew exactly where the other one was at, and we knew where our risks were. That little pocket of money that vanished, it didn't impact us personally and it didn't hurt our relationship. And I can imagine in some other households at other times without that open communication that could have been almost a deal breaker for some people.
100% agree. That's a great sharing there. Tell me, what's the end game look like for you while we're talking about this? Because I've always been a person who gets really clear on, what are we trying to achieve? What's the end game? What's your ideal lifestyle look like? And what will you continue to invest into to either attain and maintain that long term, Louise?
Look, Bushy, I would love to be able to say I've got a massive number of future goals, but this is the end game for me. This is the end game.
Right.
I'm loving what I'm doing with my children. I've got Ryan, who's 18, he's just started uni, and my daughter, who's 14. And I'm loving what I'm seeing in their lives, and I'm so involved as a mother. It's almost like I'm a full-time mum, which was the goal. I'm loving seeing what Chris Bedford is doing with property and exploring some different skills there. And I adore the business that I have set up with Chris Tate because it's so much fun working with my best friend and helping people that I can see the changes in their lives. So the legacy that they're creating for their families, being integrally involved with that brings me so much joy. I love it because our mentor programs are repeat for free course. And because we've been running it, 22 years this year coming up, we've seen 2 decades of changes in people's lives. Now, that is always my hot button. That is the thing that just brings me pleasure to see others achieving. Once you've got your own needs looked after, what are you going to do then? You've got to consider what's going to give you your jollies. So sure, I'd love to travel again, and maybe when the pandemic's all over and done with, we'll get back on to that one day. But for the moment, when I actually look at the things that get that big green tick in my life, they are covered. And sometimes we have to take a breath and realize that that's okay too. Yeah,
it's interesting. There's a lot of parallels between what you're doing and what we're doing, and the satisfaction I get out of helping people to crystallize what their ideal vision of their future is, and then helping them to invest in ways they're going to make that happen. It really is that there's a satisfaction that and fulfillment that comes from that you just can't put a dollar value on, I think, Louise.
There is, and it's the ongoing nature of that is the thing that I adore. Like when we were at lunch last, Bushy, you remember Maisie Minikin came up to us. So Maisie had done my mentor program maybe 10 years ago, and it was so exciting to see her and to introduce you to her, because it just shows as well that people, they really need people to achieve. You know, you might have, say, 80% of it together, and it's just that missing 20%. And often that missing 20% is a tree root. I have a book that I'm reading at the moment, Bushy. It's called Phosphor Essence. Hard to say.
Okay. Don't know it.
Oh, Chris Tate gave it to me. It's a beautiful book. It's absolutely gorgeous. And it has really inspired me to look to nature for reprieve in things like lockdowns, in things like global pandemics, when there's high anxiety. Now, I've been looking at John Muir, who was a naturalist. He talks about the redwood forest that I've visited over the San Francisco Bridge, massive big redwood trees. I took my children there with my husband. And the thing I didn't know that Muir talks about is that all of those tree roots through the redwood, they all interlink. It's almost like the roots are hugging those trees into the ground. They have a shallow root system, but they are intermingled. And if you could have the right environment with the right temperature, that redwood forest would spread around the world, holding itself down to the surface of the earth.
Wow.
Now, that for me is such a beautiful metaphor for traders. Some traders work like the boab tree, which is also good, that insular one root system, one focus. Maybe they're introverts, maybe they don't need a lot of people, but sooner or later they need to store water. They need to be able to have that energy replenished. Usually that comes from some external source. Or we can be like the John Muir redwoods. I would much prefer to be like that redwood, Bushy. That is, to me, the height of success. Intermingling, holding everybody together, using our muscles to be firm, and having that common group direction.
I love that. Something that resonates there with me, I guess, Louise, and I'd love your thoughts on this, is that there is no magic pill when it comes to being a successful investor in anything. It's all about working out what's right for you and then adopting a system and a process that's going to help make that happen. How does that resonate with you?
Yes, absolutely. You know, we can teach people, you and I, Bushy, to trade the markets, and we could probably do it in an afternoon. That's only the system part of trading. And you also have to consider psychology and maintenance. They're the three tenets that are so important for traders. So the system part, which most people struggle with, you can't create it yourself unless you've got a good decade or two, maybe 3 up your sleeve. You can't create your own system. You have to have external input. Psychology, what goes on between your ears, will determine your success, and how you manage those trades, even how you manage those property investments, how to intermingle those types of investments as well. That's all part of maintenance. So we need help on all 3 areas, and it's a very unique individual solution. One size does not fit all. The system that I trade, you may not want to trade, you may not be able to trade, and that's why it's so important to have those 3 aspects working together.
Yeah, I love that. Are you happy to share what your trading system is, Louise?
Sure, it's pretty easy.
Yeah, great. Can't wait.
So I trade using candlestick charts. Beautiful little red and green things that they are. They're my absolute favourite in the world. I look at weekly charts. So the majority of my trading is done on a medium-term basis, and I found that that's the perfect fit for wealth creation. I look at a moving average over the weekly chart. I look at higher highs, higher lows. I look at break past resistance or support if I'm going short. And I'm looking for more green candles than red and longer green candles than red. And I run it all in a scan. It produces a short list of maybe 5 to 10 to choose from each week. And I choose the ones that are the cheapest from that list.
Love it. Love it.
I think that's about it.
Well, and I'm going to unpick some of that because for the listeners who are going, wow, there's a lot there. I'm trying to get my head around it. There's a number of things that I think are really important there for me, and that is medium term, weekly candlesticks, because a lot of the mistakes I see investors make is they don't think enough about how much time they've actually got available to devote to building their wealth through investment, and they'll adopt a very aggressive investment approach that doesn't match their time, and then wonder why they get themselves into strife. So adopting that medium term with a weekly approach means that you're not necessarily, once you've got the entry and the exit and the position sizing right, and therefore very clear rules on when to get in, when to get out, then that takes a lot of time out, but it also takes out a lot of the emotional danger that people get themselves into, because they can then, it's a lot easier now that the whole system's automated, but removing the ability to say, well, there's the entry, but I'm still not going to take it because I've just got this feeling that something else is going to happen. That is awesome. And I'd love for you now, and it's a great segue really, to talk about candlesticks, because candlesticks were, if we talked about the tea leaves, they were the tea leaves for me. It was suddenly this really complex thing called the stock market, which was, I was a bit overawed early. It was like, how can I make sense out of this? The candlesticks were revelational to me, because like, okay, this is it's a visual tool. I'm very visual. So it was very easy for me to pick up what was happening, what the trends are, where that's going. For those listeners who aren't familiar with candlesticks, can we have a bit of a chat around, and a fairly simple definition of what they are? And I'd love you to share the story about how they originated back with the rice trading in Japan, because that's an awesome story. And then how you think that candlesticks are such an important tool for investors and traders moving forward.
Sure. Yeah. Look, I love candles, and honestly, virtual high five in your direction, Bushy. Everything you said, it's a beautiful thing. Makes me very happy. I brought Australia candlesticks when every publisher didn't want to touch them. It was very interesting. I only wrote my options book first because I begged to do the candles book first. And they said, no, if you can have a bestseller with one book, then we'll give you this newfangled, weird chart thing that you seem so intent on. Gosh, goodness me. So candles really changed my life. In that year 3, when I threw that tantrum for my broker, he introduced me to a lady who was a massive Finnish lady. She towered over me. I made the mistake of going to her house and not mentioning to anybody where I was going. It occurred to me she could murder me and nobody would know. So I went over to her house and she was just like, what in the hell are you doing? You are not professional at all. You're a little girl. She called me a little girl. Oh, how dare you? She was right, because I had no idea. So she took me through to her office. There were these charts on the wall all around, hand-drawn candlestick charts.
Wow.
And she said, look what I'm doing. And she went over to her Reuters screen, 18 grand a year at that stage. I don't know what they are now. 18 grand a year. She got a price. She went with her pencil and filled in the graph paper on the wall. And she's got candle charts. And I'm like, what in the hell are you doing? And she goes, you are uneducated. You are ignorant. You haven't read any books. I don't know why I'm wasting my time with you. You need to read this book, right? It was actually a book that's no longer around anymore. But at the time I bought it, they sent it to Austria instead of Australia.
Of course they did. They didn't know where Australia was. Yeah.
I bought it like the $100 fee. I had to pay it again for FedEx.
Ouch.
$200 for postage. See, now we've got it easy. So I read this book, Steve Nissen's book, cover to cover, and I was just literally in bed reading it at 3 o'clock in the morning, digging my husband in the ribs going, oh my goodness, this is what I did wrong with Qantas. This is what you did wrong with Ross Mining. Look what you should have done. What a charming person I would be to live with.
And I bet you really took that on board then. Not.
Yeah, no. So candles changed the way I viewed the world. So the green candle is when the close is above the open. So it's the color of growth. So if you see more green candles, then it means that the share price is growing. And a red candle is where the close is positioned below the opening price, and it's the color of blood. So the funds are leaking out, they're being leached away from that instrument. It doesn't matter which instrument we're talking about. It can be futures, it can be commodities, it can be equities, whatever we're talking about, that supply demand holds. That red and green makes sense. So they're patterns that can form within that supply demand that can tell us whether people are excited about this equity, whether people are continuing to buy, or whether they're just thinking, no, not for me. So it's reading the psychology of the market participants, and I love it.
Yeah, and you hit on the important point there. It's giving you a rational ability to actually read those perceptions and then feed off those perceptions. So you're not caught up in those same perceptions that everyone else is, but you can use that movement to your own advantage using the candlestick charts as the signals that are going to allow you to do that. I think it's absolutely fantastic in that regard. Something I'd also like you to talk about, if you don't mind, it's a little bit of that debate between the technical and the fundamental traders, because there's a lot of almost misinformation out there where people will quote Warren Buffett about saying, well, you know, you buy a stock and you hold it forever. If you're not prepared to hold it forever, don't buy it. That sort of psychology and that sort of an approach can be, there's enough truth in it to be dangerous. Yes. I'd love for you to talk around your view on that approach versus the benefits of taking a more technical approach through the likes of candlesticks and other mechanisms to help you in being successful as a trader.
Well, when you asked me about my trading system, I really only touched on entry, but there are two other aspects to a good trading system. That includes your exit and your position sizing. So I just want to touch on this because I think a lot of people get caught up, me included when I kicked off, they get caught up in how to get in. It's not the full story. We are talking about only part of the story, and it's not even the most important part. I think a lot of entry methods are a placebo to help us get involved. It doesn't actually tell you when to get out and how much money to place into a position. So they're the other parts that I believe Buffett needs to address. If you've got an HIH that you invested in, you have no money left in that. If you've got Babcock and Brown and you put your money into that, there is none left, zero. You have to predetermine when you're going to exit prior to putting on that order. Every single order I put on, I know where my stop point is, and I've worked out from a risk point of view how much to put into that position. And that is really, really important. And one more aspect that I want to cover, because that's very trade specific, I want to talk about overall risk as well. I want to talk about something we've called the macro filter. Now, the macro filter tells you whether you should be getting involved right now or not. Now, what we look at, and Chris Tate and I are such firm believers in this, every piece of back testing we've been able to do, all of our traders follow this, every piece of real-time testing we do tells us this is a good idea. Now, if the market is going up, in terms of like the All Ords or the ASX 200, then get involved. If it's going sideways or down, do not get involved. It is that simple. You have that saying, a rising tide lifts all boats. Yeah, that's where this macro comes in. So if you've got the points of the pips or the index or whatever you're measuring it in terms of that particular chart, if that is above the 30-week moving average, and that's the general index for the market that you're investing in, you can go long. Okay. Now, people overlook that, Bushy. What are your thoughts on the macro filter?
I think it's brilliant. It's absolutely brilliant, because you can get, it's the old story. If you use your tree analogy, you can get so lost in the pine needles that you don't understand what the forest is actually doing and what direction that's heading in. So I think as a general indicator, absolutely brilliant, because it puts a context around the individual stock or index or whatever it is that you might be having a look at. Then you've got something to track that against. A couple of things there that are probably important to explain to those listeners who might be considering the equity side of things for the first time. Back testing, for those that aren't aware, of course, is applying your system to the history of the market for as long as you can go back. And then seeing what sort of results and what sort of probability you're going to get out of trading that to give you a sense of confidence around how that might then apply to the future. So I think that's a key aspect. And just for those that aren't sophisticated in their investment or listening, going long versus going short, as we know, most people just assume that you're buying something for it to go up. You can make just as much money shorting the market by betting that whatever you're trading is going to go down, but not for the faint-hearted and not for beginners. So I wouldn't mind your views around shorting, and also leverage, using either the likes of CFDs or actually a margin loan. What's your feeling around when and if or ever are those things applicable?
Yes, it is a good point. And of course, there's leverage within instruments as well, such as CFDs and, leverage with property. I mean, how could we do it without it, hey?
Yes.
So, I think there is a certain level of comfort that you can have as you move through. It isn't initially apparent when you start trading. There's unfortunately a saying called, there are no old, bold traders. Now...
Like it.
Now, why is that? Let's just think. A few reasons. Firstly, as time has gone on, I have to say I've become more and more conservative. I have traded daily systems. I've traded very short-term systems. I have traded 2-minute candles because I thought that's what that lady was doing. I'd better do that too. Copying somebody else's system with no knowledge.
Yep.
I do think, though, that leverage belongs to the sophisticated investor. It's somebody who has already been around the block, who understands the ins and outs. They don't have to be completely cashed up to the official sophisticated investor definition, but certainly somebody who understands the instrument that they're trading and what can happen if leverage goes wrong. Now, it's really tricky when you're starting out because you think, what can go wrong? It doesn't seem that bad. Hey, it seems like a piece of cake, doesn't it, Bushy? What are you oldies complaining about? You've been in the market so long. Are you jaded? Oh, my gosh, I've heard it all. One of my first option trades, this is unfortunately where I understood the power of leverage. I wrote options, which means that the money comes to you from the market, but you are in a situation where you've got liability there if things go wrong, okay? I wrote a number of options over News Corp at that stage. I went and shopped. Yeah, because isn't that fun? That's what we do. I spent the money that I'd just earned, and just as she was handing over the last bag, Pretty Woman style, okay, I went, what happens if things go wrong? And I rushed back to the car. I found a piece of paper. I added up what my liability would be. And if that trade went wrong, I would have owed $700,000.
Ouch.
Now, let that sink in for a bit. So a beginner trader throwing themselves in the deep end. Hey, yes. So let's just get back to something that's more comfortable for us. We're looking for the beginner trader to be able to make those 1% gains every day.
Yeah.
That means they have to have their equity preserved. That means emotionally they have to be sound to be able to take that next step. And if you blow yourself up on those first few trades, you won't have the equity and you won't be emotionally sound. That's the problem with leverage. We see it time and time again. It drives me crazy when new people, especially young bucks, the gorgeous looking guy with the muscles, they're the ones that often say it's because you're really out of touch with this. We should really do Bitcoin. I should get a margin loan and mortgage my house and trade Bitcoin. Now, this concerns me, Bushy. What are your views on what I've just said here? Because I'm guessing you've got a few.
Well, I've had similar experiences to you. I was very gung-ho when I started, and I leapt into CFDs, actually, and got my fingers very badly burnt. I'll never forget, there was a trade I did. It was on AMP, actually. I traded CFDs. I did all what I thought was all the right things. I put in a guaranteed stop loss. What I hadn't bargained for, Louise, because I was very young in the trading exercise, was that a market gap occurred between when AMP closed the day before and where it opened the next day. And because it had opened a long way below what my guaranteed stop loss was, I took a hit of 30 grand. So that was a massive lesson to me in leverage, but it was also a massive lesson to me in position sizing because, I'd read all the books. And after the event, I read Van Tharp's book where he great analogy where he said, if you're trading, you've got to be able to keep throwing snowballs. And if you run out of snowballs because you've used all your money or you've been taken out, then you can't play the game anymore. So that was a big lesson to me in terms of let's get focused on making sure that from a risk management perspective, I'm not putting too much of my trading float into a particular trade. So if it goes bad, and something that's allied to this, I think, is the probability of your trading system. So one of the big lessons I learned early around this was that my trading system at that time had 60% losers, but it was still a very profitable system. And a big part of the psychology for me at that point in time was learning the important lesson that I was going to have more losing trades than I was winning trades, and psychologically being able to sustain loss after loss before I had a sizable win was very challenging in the early days. I knew, my brain said, yeah, this is okay. I get ready for losses. But when you actually have the loss, it can have a real impact. So that there was some important lessons there. And if we then apply that to the analogy used of the macho guy throwing everything at crypto, very scary from all of those things that we've just spoken. The position sizing's wrong. There's no clarity on, yes, they're in, but when are they going to get out? How they protect themselves? When is the trigger that's going to say, I need to get out of this on something that's extremely speculative and has no real value other than the bigger fool theory. And that is that, if I invest in crypto, I'm hoping that some other bigger fool is going to pay more than I am for it to keep going up. So
I love things that trend. I love things that have a regular trend. And I think you can trade anything if it trends effectively. That does incorporate crypto. You can trade crypto, but you're quite right, is that the people trading crypto are often not professional in their thought pattern and their mindset about how to mitigate risk. They're putting positions on that are too big. They're using leverage. They're bringing their house mortgage into question here. Some of them are putting it on credit cards. They've got massive FOMO because they're looking at what other people are doing and they've got that awful fear of missing out. And there are a lot of nice little videos made by very eloquent, very attractive looking people telling you how to do this. And you have to wonder about vested interest, or is that just me? Let's bring that onto the table. The thing with it is there's a place for everything, but it's what percentage of your overall equity. So for my husband and I, he's sitting over there, which is why I'm pointing over there. We do have slightly different views on this. And because it's an unregulated market, there is no safety net. I can tell you right now, the arguments that couples are having from a trading perspective over this, they are incredibly in the forefront of my mind. If you have got a spouse that is so intent on trading something like this, then put boundaries around it. Make sure that you discuss this with your spouse. Work out what percentage of your overall equity you're going to put into that market, particularly an unregulated market, and work out when you're going to exit. And I'll give you a clue. If you lose more than 25% of your money, it takes you 33.3% to actually make on your remaining equity to get back to break even. Work out if you can live with that. And if you can live with that, go for that unregulated market. Go for the leveraged little Bolivian trade. What the heck? There's Ethereum as well, isn't there? Why not splash it? But be prepared that if you minimize your risk by working out your exit on that particular position and your exit in terms of your overall equity, then you will live to trade another day and there will be another trend that you can capitalize on.
Yeah, I love it. Something I wouldn't mind clarifying there for the listeners, because they may misinterpret what you and I are saying around this. When we say an exit point, it doesn't mean if we're going to buy something at $10, we're going to sell it at 11. What it means is we're going to buy it at $10, but we're going to let the profits run uncapped until something happens in the marketplace that triggers our exit. So again, that's my read of what we're talking about.
That's exactly my read as well. A stop loss is designed so that you don't run into hot water overall. So you have to have an individual stop loss per position that you enter. Otherwise, you are gambling, my friend. It is putting, hey, $30,000 on black. Let's see what happens. No. There is no way that you could have achieved what you have achieved, Bushy, or I could have achieved what I've achieved if we didn't premeditate when things go wrong. How do we react? I think that's so important. I don't want to see people run off and gamble because you can't look at results and say, this is what I'm likely to achieve. The reason why we're so premeditated and so stuck in our ways with entry, exit, position sizing is because it has a lovely, predictable quality about the style of life you can live if you continue doing what you're doing.
Absolutely. Yeah, beautifully said. Beautifully said. So that's a nice lead into summarising, I guess, Louise, what you've seen over the years, given the massive number of people that you've assisted on their journey. What are the biggest mistakes that you are seeing traders making? And on the flip side of that, what are the keys for successful investing in equities as you see it?
The keys for successful investing. Oh, that's got a good name of an article popping up in my mind there, Bushy. Maybe a joint article down the track.
Yes, there we go.
So firstly, have your trading system sorted out before you put a dollar in the markets. You want to know your entry, your exit, your position sizing. Also, have a look emotionally how that's going to impact you and the people around you that you love. Work out who your support system is. If your spouse is not on your team with this, don't keep ramming it down their throat. They're going to be really sick of you. They're going to consider the market to be an affair that you're having. Right?
Yeah, that's a great description. Yep.
Who wants mention-itis with your mistress? Oh, yes, Vanessa said this to me. Vanessa said that to me. She will stab you with a fork. So stop doing that to your poor spouse. What else, Bushy? What do you think are the keys here? I'm sure there's some I've missed.
Yeah, we've talked about the key ones there, I think. Because if you're adopting that trading system with very set rules, then you are removing your own emotion from the equation, which is I believe the biggest thing that shipwrecked myself early on was that I allowed my emotion to cloud judgment. There's probably a little bit about lines of resistance and support that also feed into that. Do you want to expand on that a little bit?
That's definitely a key point. That's part of the trading system because that's part of your entry, and it may even be part of your exit depending on how you implement those. Lines of support and resistance are probably, if you took away all of my other trading tools other than my candles, don't take those away. Take away everything else and just leave me with support and resistance. They are the key for me. I'm looking for a breakthrough resistance on heavy relative volume with a long green candle. That summarizes my setup and my trigger. Now, if your listeners here are getting confused with all of those terms, you really need to read Trading Secrets, my book. Yeah. You really do. It's so essential. I have definitely been at the advantage of being able to train people with a visual impairment how to do this, and they have taught me so much. So from this group of the mutants, I had all sorts of spin-off groups with different disabilities. Now, the way that I taught the people with visual impairments to trade is by doing little plasticine charts. So once I could show them with their fingers what those little charts felt like and looked like, then they could see with their 2% vision, for example, my beautiful trader, Jim Edwards, 2% peripheral vision. I mean, my God. And he's an exceptional trader because he knows the pattern that he's looking for. So he can use that ruler on his computer screen to look for those horizontal areas and look for breakouts the way I've described, Bushy.
Yeah. Yeah. No, I love that. Well, we'd sort of now move that into where we're at with what's happening in almost any asset class at the moment. We've sort of seen this rebound since COVID. We've seen these sort of boom conditions, and there's a lot of talk in the media about bubbles and busts and everything else that goes with it. We're almost starting to go sideways in quite a few of the instruments at the moment. Given all of that, what's your suggestions on your current read of where it's heading and how traders and investors should be interpreting that?
Oh, Bushy, I love you for asking the question, but I don't know.
Great, and that's the answer I was looking for, actually, because for the very reason that, as you and I know, if you are investing with a proven and back-tested trading system, what's happening in the market doesn't matter.
That's it. So, I was kind of listening to your voice to hear whether, are you trying to catch me out here, my friend?
Never. But let's expand on that. I'd love your read on that, because everyone gets caught up in the moment.
Yes.
And I can't remember whether I read it or someone said to me years ago, if you're investing in anything and let's say you're looking at the candlestick charts, then rather than have the microscope on and looking at what's happening, step back, walk outside the back of the room and then look at what's happening from afar, and then you'll be in a better picture to understand where things are at and what you need to be doing about it.
100% accurate. I can tell you right now, I'm almost fully invested, which shows that we have been in a trend. Okay, that gives you that bit of information.
Yep.
I have no idea what will happen from now on. I have my stops in place. They're auto stops, so I'm taken out at the first sign of trouble. If it goes past a certain price point, then it automatically sells me out. I don't get a choice.
Yep.
You don't want that choice at that stage.
Exactly.
While you're in the heat of the moment, you don't want that choice. You want it to be automatic. And that's really, I think, a really key point. So as long as the market is there, then I will find something to trade. And if it has a trend, then I'll probably be in it. And if it stops trending and it hits my stop, I'll be out of it. And who am I to question? Who am I to force my views on the market? The market is bigger, it's hairier, it's uglier. It has got more power than I will ever have. I am the little bird of prey in this situation. So I have to sneak out and get the seed while I can. I have to make sure if that's a shadow. Is that a shadow? That could be a shadow. Right? That is my view. I'm the tiny little weasel. I'm not the big, loud lion in this scenario. So we can't dictate what the market will do. Nobody can. If they're saying that they know, they don't know. If they really know, get them to give you the Tats Lotto numbers.
100% agree. And I think the analogy I often use is that, we are like minnows or piranhas in the marketplace, where the big institutional super funds and everyone else they have the ability to manipulate and change direction. There's no doubt about it, particularly in a short-term basis. But again, sort of coming back to the fundamental approach, what's happening in the market doesn't matter. If you've got a system and you're very clear on your entry, exit, position sizes, and those key aspects, then it doesn't matter what the market's heading, because the signals will come along when they come along, and when they do, you activate it. And when the signals are there to get out, as you say, automated, so you don't have to do anything and it automatically takes you out, then market conditions and all the noise that we hear that's driving the fear and greed scenario that works well for the media doesn't matter.
And there's also some new psychology around hot and cold states, which is quite interesting. Okay. So I know you've got an adult audience, so I can go into this direction. But if you do have little children, you might just want to fast forward for the next couple of minutes listening. That's got your interest now, hasn't it? What they've found, and this is under a variety of different circumstances, but I'll cut to the adult one, is they've looked at uni students, because often they're the ones that are involved in these types of studies, and they've looked to see morally where they sat and how do you swing that moral needle. How depraved did they want to get with their sexual acts and still be okay with it, all right? So in a cold state, you might say that you won't have sex with that goat. But in a hot state, and they measured this in many peculiar ways, in a hot state, sex with that goat might seem like a better idea, okay?
Okay.
Now,
that'd be a pretty interesting state, I reckon, but there you go.
That's it. Now, they've got this same concept going in terms of a variety of different personal decisions that we have to make. I want to see it done with traders. Now, the hot state is when we've got money in the markets, things are really booming. Hey, our brain leaks out of our left ear. We can't make a non-emotional decision then. We cannot, because we are emotionally invested. We are hot for that. We are greedy, we are fearful, and we are not thinking. We have resorted to that very limbic system, that deep lizard brain concept, where we are predator or prey and we are in survival mode. That is not conducive to that outer layer of the brain, the cerebral cortex, which is the older, more ancient part of your brain, which is the thinking part of your brain, particularly the left prefrontal cortex, almost the last to evolve. That's our parental controls. That says, don't have sex with that goat. Okay. That's the one that says, maybe I shouldn't be doing this. All right. So that brain concept is so important for traders. That is why you have to use your prefrontal cortex to actually write your trading plan in advance, with no money in the market, with complete detachment, with focus. And that way, in the heat of the moment, when the hot state takes over and you're in the actual trade, you will have something written in the cold light of day to refer to.
Yeah,
Have I shocked you? Have I shocked you, Bushy?
No, it's an interesting analogy, but a very apt one, and I love the way you described that, because it is so true. It's if we adopt that to a normal relationship, if you're very clear on what you're looking for in a partner versus looking around a bar after you've been drinking all night, then it's a very different answer you're going to get. And if you've created that discipline around that to protect yourself from yourself, really is what we're saying.
Yeah.
Then you're unlikely to shipwreck yourself or sabotage yourself as a result. So no, that's awesome. Look, I am mindful of your voice. You've been extremely generous today, Louise, and I'm hoping this is the first of many conversations that you and I are going to enjoy, because we share very similar views on the world of investment generally. And we've only really scratched the surface today on a lot of subjects. So we will talk again on things that we think we need to be illuminating other investors with. But I'd love to transition now into what I like to refer to as the ambush round, or the quickfire, bushfire, lightning round of the typical 5 questions that every podcast asks of you. First of those, Louise, is what's your favourite quote and why?
Yes, I don't know who to attribute this to, but to know and not to do is not to know.
Like it. Yeah, I can see why that's. Why is that important to you, or why is that your favourite?
I love how some people talk a big game and they've never had a cent in the market. It cracks me up. I actually have to stop the smile from smirking across my face. I much prefer the person who's been in the trenches, who understands all of the things that can go wrong, who realizes life isn't perfect, but they're doing it anyway. I have so much respect for the warrior.
100% agree. In my book, The Freedom Formula, I talk about the law of inverse investment, which basically goes that the louder someone talks and the bigger their opinions on investment, the less likely they are to have done any.
Nice.
And it's amazing how, and I still see a lot of this, and you probably do too, people taking advice from their uncle, mum, dad, friend, who has probably never invested, or if they have, they've basically flipped the coin and or gone to the casino basically to try and get a result, versus the getting sensible about seeking people who have already proven to be good at what you're looking to do and learning from them. So love that. What about, apart from your books, and you've already illustrated to us the two that the audience needs to be reading if they really want to invest in themselves before they invest in the market. But what other top books would you recommend that we read, and why?
I love this one, The Slight Edge
by
Jeff Olson. This has got to be one of my favourites. One of my mentorees, the person who's done the mentor program, recommended this, and I just can't put it down. I read chapters at random, and I even open a page and I'll just go, "Ooh, I'm facing this issue. What page wisdom can it impart to me?" I love it.
So do I. Yeah, it's actually one of my favourite books, The Slight Edge by Jeff Olson. And actually, my favourite quote is that life is, and it's straight out of that book, life is a curved construction. Time is the builder, and your choices are the architect.
Ooh.
That is straight out of that book.
Oh, and that's quite nice with your architecture background too.
Yeah, that's, I guess, what attracted me to it, but it is so true. It sort of sums up what it's all about, and that is a fantastic read. There's no doubt about it, Louise. Now, next question is a little bit left field, because most Australians believe that we pay too much tax. So what's the top legal thing that you've done to minimise the tax that you pay, Louise?
See, Bushy, I actually don't think that should be the goal. I think you should pay heaps of tax because it means you're earning more.
Love it. Yes.
Yeah, get a good accountant, of course, but I don't begrudge the many multiples of thousands that I pay in tax, because, heck, it just means that I'm going to always be earning more than that. They're never going to take 60% of what you earn. At worst, it's going to be 50-50, isn't it?
Exactly.
So I'm okay with that. Pay for the schools, pay for the hospitals, pay for the roads, pay for the lights. I don't have any interest in any of those projects. Go for it. It's a form of outsourcing.
Love it. Love that outlook, and it's so true. I know you've travelled extensively, and so have we. And what I noticed, what I loved about the States when I was over there, was the amount that they put into infrastructure.
Yes.
That's really, and that was done way back in the 50s, that's still serving the country now. And the only way that happens is by paying tax. In Australia, we enjoy, I believe, the best quality of life of anywhere on the planet. And there's only a very small population. So if we're going to continue to enjoy that level of lifestyle that we take for granted, then why complain about the tax that we're paying that's going to make that happen? That doesn't make sense.
Yeah, I'm hearing you.
Love it. Back on the investment topic then, what's both the worst piece of investment advice and the best piece of investment advice that you've ever received today, Louise?
That's a good point. The best would be start young. And if you're not young, start now.
Yep.
The worst would be only invest that which you can lose. I don't understand that, because you're setting yourself up for failure before you even put money in. If you wanted to lose it, you could give it to your friend, give it to you, Bushy.
Yeah, I'll take it.
Yeah, hell, I'll take it. Don't invest with the thought that you're going to lose first off. You're going to invest and grow your net worth. If you're implanting that negativity, what's to become of you, my friend?
Yeah, law of attraction, that you're starting off with that mindset, then that's exactly what you're likely to attract.
Yeah, no worst case scenario for sure. Always set your stop loss. Don't be completely, hey, everything's rainbows and unicorns. But we're doing this to get rich. We're doing this to help the people that we love and to spread our wealth to the communities that can't afford things that they need. So let's keep those values first and foremost in our mind.
Yeah, love it. Last one of the set is, love you to share with us a personal habit that you believe has contributed most to your investment success today, Louise.
The thing is, Bushy, I think habits are the core of everything. So I've got 500 different habits that probably contribute. One of the ones that's probably not all that appealing, but I actually quit on things that I don't care about and that don't mean a lot to me, and I quit fast. Otherwise, I don't have room for the things that do mean a lot. So I don't know where you sit on that, but I hear a lot of people saying persist, persist, persist. I do get that, but only for things that are in line with your core values.
Yeah, exactly right. And what I'm taking from what you've just said is that your biggest habit is that you've made a habit out of habits.
Yeah, nice.
Love that. Last big question that gives you an opportunity to sort of wrap everything we've spoken about today into a nice, neat bow. If I gave you a microphone that spoke to every single one of the 7.7 billion people that are currently alive in the world, and I gave you 60 seconds to talk, what would you say, Louise?
I don't know if I need 60 seconds.
Good, even better.
Look inside, find your core values, and format your entire life to be in line with those core values. That is achievement of happiness, that's achievement of wealth, and it's satisfaction.
Yeah, beautifully said. And how many of us sit down and really distill what our core values? I know I have, and I can run through them very easily. And we've done the same for our business, so that we're attracting people that have the same values and believe what we believe. But if I sat down and said to most people I meet, and I do actually, when someone comes into our business, we talk about what's your vision for your life and what are your values. And if they can't answer those questions, it's like, well, you better go on and work that out first and then come back to us, because there's no point investing if you're not clear on why you're doing it, what's important to you, and where it's going to get you to.
Absolutely. I love it, Bushy.
Yeah, that's brilliant. Awesome. Look, again, you've been extremely generous. This is a milestone moment for me, Louise, having you on the podcast. I've been an avid fan for decades, and to have the opportunity to have you share your message and your voice with the audience I have a smile on my face for weeks now. Thank you. And but I'm interested in you sharing with us what's next for you, and more importantly, how can listeners now connect with you and start to really enjoy the wonderful wisdom that yourself and Chris Tate have to offer?
Well, I would love to hear from your listeners, Bushy. So the easiest way to get in touch is through tradinggame.com.au and register your details. I'll send you across my trading plan template, which covers all of the major areas you need to know to write an effective trading plan. You get my own personal trading plan template. And I'll also give you, once you've registered, my free 5-part e-course called Trading Made Simple. And I'll send you emails so that you'll be able to have those audio lessons. I know you'll love it. For those who are interested in podcasts, which I'm guessing there might be one or two listening, maybe those 7.7 billion people that are listening to this podcast right now, make sure you register for talkingtrading.com.au. And Bushy, I'm thinking that we will most likely have this as a joint show. So it'll go onto your podcast and my podcast. Bushy, tell us where people can find you, what you can offer people, and how people can best get in touch with you.
Absolutely. Yep. We'll trade places. So Get Invested podcast, obviously, on all good podcast channels is the best place to start. Invest in your knowledge. I always say invest in your knowledge first. So jump on our website, knowhowproperty.com.au, or my personal website, bushymartin.com.au, and grab yourself a free copy of my prequel book, Get Invested, which won the Best Personal Investment and Finance Book of the Year at the Australian Business Book Awards a couple of years ago. And thirdly, if you want to be a little bit more interactive than that, come and join me on our live interactive Freedom Flight series, which is a 3-part live interactive Zoom information sessions where we impart all the key pieces of the jigsaw that are going to enable you to decide, is investing for you? And if it is, what sort of a strategy should you be adopting?
And so just to clarify for my people, Bushy, so Bushy, you look after not only the trading side of things, but also property, don't you? Could you perhaps give us a little bit of background so that we've got this for my listeners?
Yeah, so the focus of our business is more on the property side, and the reason why I've been so avidly pursuing the partnership and referral position with yourself and Chris is that you are far better at the equities piece than we are. What we are very good at doing is helping people get really clear on their life vision and then their finance strategy and structure that needs to support that, because those two talk about the end game and the starting point in terms of capability. And from there, it's a matter of which is the most comfortable investment instrument that is going to suit your sleep at night factor. For some people, it's equities. For some people, it's property. For some people, it's both. But it's always an and discussion, not an or discussion with us. So that's a very important piece of the equation. But in relation to that Freedom Flight series, that does focus on the property aspect. So if you're really wanting to understand the complete jigsaw around how to invest safely, affordably, and easily in property, then come and join me on those series. If it's equities that you're really looking to get into at this point, then they'd be much better doing your e-course and doing some work with you, Louise.
Fantastic. We can see why Bushy and I, with our views, with our values, have dovetailed in so beautifully together. He has just been so patient while he's been waiting for me to be interviewed. I think it's probably a year and a half, maybe even closer to 2 years, Bushy, that you've been waiting to have me on your show. And I appreciate your friendship and your care. I appreciate everything that you're doing for your community. You are one of the gems in life, my friend. You and Sonia bring a smile to my face. I'm so happy to be on your show.
Well, the feeling's absolutely mutual. And one of the key qualities of being a successful investor is patience and persistence, Louise. So I guess I'm evidencing that. And as I say, I'm absolutely thrilled to have you on Get Invested. This has been a goal of mine for many years, to be able to have an in-depth conversation with yourself and share that with others. So I know this is the start of many more enjoyable conversations, and thanks for joining us on the show today.
Thank you, Bushy.
Thanks, Louise. To get a summary of all this investment gold in the show notes, just email me on hello@khgroup.com.au. That's HELLO@khgroup.com.au. Or check us out at www.bushymartin.com.au/Get Invested. I look forward to joining you next week for another episode of the Get Invested podcast. So thanks for listening. And as always, dream as if you live forever and live as if you die